Alright, I've been Coin Chess and Wine here. I actually want to devote an entire video to discussing the long-term historical significance of the 1150 price level on the S&P 500. You're looking at an updated daily chart here, and you can see this very top pink line, which I've just added, denotes the 1150 level. You can see we closed this past week at 1148, and actually on Tuesday we hit 1148 as well. So I think after the recent rally, I think it's, in my opinion, in the upcoming week, we're going to at least come to terms and try and negotiate this 1150 level. Now, before I get into the ultra long-term view of 1150, the last time we hit 1150, actually the first time we hit it since the 2008 crash was back in January of this year. And you can see we consolidated up here for 2 weeks, and then it became clear that this level just was not going to hold for the bulls, and we rolled over, and we had a pretty fast and furious correction here. But we did find support down here at this 1040 level, which, as we know, over the course of this summer, proved to be very sturdy support. So I think we're at 2010 pretty much so far this year, and I recognize that we did come up here in March and April, and we did come up to 1200. But I think net, if you're really taking a big picture perspective right now, 2010 right now is about us coming to terms with this 1150 level, and eventually we're going to break one way or the other. And my point is, what I want to do in this video is show you historically, as I zoom out here to the monthly chart, that you would be remiss right now to fall asleep at the wheel as we come to terms with 1150 yet again, because my point is based on hit over the past 12 years, every time we've come in contact with 1150, whether you're a bull, whether you're a bear, this isn't some bullish talking point or some bearish talking point. Either way, in bull and bear markets, once we've negotiated that 1150 level, in either way, we've never looked back, and it's almost always led to violent moves in either direction. So I'll give you an example. Right here is the year 1998. This is the first time the S&P 500 ever came in touch with 1150. And you can see we tried to break out, that failed miserably. And as soon as it became apparent that the bulls could not hold 1150, we saw this sharp correction down to 920 in a heartbeat. So right there, first test 1150, failed miserably. Next thing you know, we're at 920. So that should tell you right there, 1150 is a level that the market needs to negotiate and needs to react to. It's an important psychological level. However, once the market found a bottom here at 920, it made up its mind, didn't want to collapse. Once we plowed through that 1150 level, we never looked back. We did a moonshot up to 1500 on the S&P 500 as the Nasdaq and the dot-com bubble was going crazy, really. So I think that shows you once we negotiated 1150 successfully, we never looked back. It was a moonshot. However, on the other side of the market, once the bear market commenced after the dot-com bubble burst, 1150 was one of the first places we went to in 2001. In the early to middle months of 2001, we found support here at 1150. And it was only the 9/11 attacks right here later that year in 2001 that pushed us down below 1150. And even then, after a 9/11 attack, something as disastrous as sudden as that, the market still wanted to buy that sharp sell-off and rally us back to, guess what, 1150, again denoted by this pink line here. So you can see again, it's a very important level. However, and this is very important, once we made all these candles at 1150 and we printed all these candles here, and the market decided that it couldn't withstand 1150 here, we had the wipeout and this final sharp leg, which is even worse than the 9/11 sell-off in terms of price action. This sharp leg down to complete the bear market for 2002 and then into 2003. And then, of course, to give you an idea of how significant 1150 is again, 2004 it was resistance. All of 2004, 1150 was resistance. However, 2005 it became support, and once it was obvious that 1150 was support in 2005, off to the races again. And we hit above 1500 at the end of the bull market. Now, 2008, I'll close this video up. 2008, September of 2008, again, right before we crashed in October, the market wanted to try and hold that support in 2008. As Lehman failed, Citi and AIG got bailed out. It tried as best as could, but it was just too much pressure. And of course, once we lost 1150 in October, it was a complete crash again.